Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Mehta. Let's welcome our experts at independent market expert Shahina Mukadam and Yogesh Mehta of Motilal Oswal Securities joins us on the show. Thank you to both for joining me on the show. Today on Hot Money, we'll discuss stocks like CESC, we'll discuss the Pharma pack, we'll talk about Grasim, and we'll talk about a mid-cap or a large small stock that you believe could be a good investment avenue for you. So let's start with the first stock, and that is CESC. CESC has been on a tear. It was up almost 10% on Tuesday. Let's see what it's doing today. It's rather flat in trade. But what's the way ahead for CESC? Obviously, they've obviously spoken about the demerger that will happen and value creation. Is that something that, is it priced in, or is there more for the stock to go? We'll ask our guest. So, Yogesh, I'll start with you. The demerger news is known, all the ratios are known, but there are a couple of roadblocks before which this demerger happens. The counter has been reacting positively. Is the demerger news priced in? What are you all making into this one?
So far, the demerger news, we have seen a sharp move in last 2-3 days, but demerger is not priced in at this point in time, because we know all that energy, the CESC itself, the Haldia energy, the SOTP valuation from the first source 50% stake and the retail Spencer. So all these are yet to come up, and the big businesses are CESC distribution and the retail Spencer. So this will give the unlocking of the shareholders value. So it is still to play on the cards. So even if at anything between 950 or 1000, it is very good. 950 to 1000 is a good entry point again for the investors, because we believe that maybe a record date or maybe a approval from the West Bengal government should happen by maybe third quarter of this FY19, and maximum by that. So that will have a, it's hardly 4 months away, so one can play on that.
Okay, that's the view. I'll come back to you on CESC, but Shahina, your opening statement, what do you make of CESC as a stock, and what's the trigger for the counter going ahead?
I agree with Yogesh. I believe that the demerger valuation is not reflected fully into the current price. Also, if you look at, let us say, the Dhariwal, there, which is generating losses as of now, but that, I think, when it turns into profitability, that would improve the generation profitable, the division profitable, should become very profitable, much more profitable. I think the profit should go up by around 15 to 20% in generation. Distribution itself is doing pretty well, and Spencer is another I think part of the overall company, where with EBITDA margins moving up over the next 3 to 4 years, I think the target is almost 5% by the management. The overall valuation of the company should be good. So from here, there is value. Okay, there is value left in the counter. We'll open it up for discussion. Yogesh, you all have active coverage on CESC. What are you recommending clients? What's the target price that you're giving on the counter? Yeah,
Darshan, for CESC, our price target post result number, we have revised it a little bit of downward with 2-3%, but yet 1292 is based on FY20 post unlocking of the shareholders value, or maybe SOTP valuation that can be considered. 1292 is the price.
So what are you giving most value to? Let's say this demerger happens. What will generate a lot of value, and which are the assets that probably you would avoid in CESC once this demerger happens?
Of course, the Haldia energy, which will be avoidable as this point in time, but CESC, where the tariff order is still pending and there is no tariff hike for this calendar year, full calendar year. So that will unlock value again for CESC, and the Spencer retail we are betting very big, because retail is the talk of the nation right now, where it can add a significant EBITDA to the core. So that gives edge over positivity for the CESC.
Okay, so positive views coming in. Do you have a potential target on CESC, and where do you see value coming in once this demerger happens?
If you really combine all the three entities, good valuation, I think the stock could go anywhere up to 1,400. Based on, let us say, if we value Spencer's at around, I'm talking of an optimistic valuation of around 2,500 crores. You talk of the distribution valued at around 9,000 odd crores, and the rest for the, in terms of overall value, about 5,000 crores for the generation business. So there is a lot of value that can be unlocked over a little longer term period. So I would say the upside could anywhere range between 20 to 40% if you're holding it for the longer term.
Okay, that's the view that's coming in on CESC. Positive views coming in on the counter. The next sector is actually a sector that we want to talk about. It's the pharma sector. You know, companies are doing extremely well. Divi's is trading at lifetime high. You have Sun Pharma, which is trading at a 52-week high. Most of the pharma stocks have reacted positively, be it a large cap or be it a mid cap. So, pharma sector as a sector is doing well. Which stocks among these sector are our experts liking at this point of time? We'll ask them. Shahina, pharma sector, is there any stock that you like in this sector, and overall view on the sector as such?
Yeah, I think in pharma there are two things happening. One is that we've had such a negative sentiment over the last 2-3 years that we've seen the PE actually having contracted, and they are relatively better priced, attractively priced versus the overall market. So on one hand we have a potential PE expansion, and on the other side this was also because of genuine reasons that were there on the ground, like a lot of US FDA, I would say most of these companies, the larger ones that we cover, were affected by restrictions that were coming from the sales to the US. So to that extent there is some resolution that has started to come. Resolution takes a lot of time. Once you have the US FDA putting restrictions on some plants which can export to the US, and those resolutions have started to come. We've seen Sun Pharma getting its approval for the the regulatory approval to start, they would get they have got an ER, so they would start getting certain products to export to the US market in the nearer term. So with Halol coming in, now we have other companies like you have Dr. Reddy's, you have Lupin. They are also going through such issues. So as the resolution comes in, the overall sector PE should go up. That is one. And I think if you see specific companies, they have been impacted in terms of margins contracting because of the US market. So you have US market stabilizing and the margin expansion, which we are seeing in the last couple of quarters, even current quarter, that also should improve. So overall, I think the sector also should start doing well.
Which stock is your preferred pick here?
I would like Aurobindo. One is because the PE, as I discussed, the valuations are I think one of the cheapest among the overall pharma. It's if in FY20 1 year forward, I expect an earnings of close to 60 rupees. So currently it's just about 10 to 12 times PE multiple. I think is pretty attractive. And secondly, I think they are also affected by EBITDA margins that have contracted because of problems in the US and pricing pressure, which I think should stabilize over the medium to longer term. So I like Aurobindo. Another one, and I personally hold Aurobindo. Another one which I personally hold and I like with a longer term is Sun Pharma. I think there is the similar issues.
Okay, so Sun Pharma and Aurobindo is something that Shahina likes at this point of time. Yogesh, your view on the pharma space? I think Motilal Oswal has been quite bullish of late on the pharma space. So you all have got the rally right. Are you all still bullish on the rally? And you still are hopeful that this rally will continue? And which are the stocks that you are recommending to your clients here?
Yes, Darshan, we believe that the rally can continue further, though we have seen a sharp rally in last few sessions only. We believe that more or less the hangover of the US FDA has been now is discounted now, and it's priced in, and we have discussed many times on the show as well that this may be it's a matter of time that this the hurdle will get clear, if not now, but it will be maybe 1 or 2 quarters later. So overall the PE contract, I agree with Shahina that PE contraction has happened due to this hangover, and now it is poised for a growth from here. So we believe that Aurobindo Pharma is the best pick right now, comparing the price objective which is there right now, because it is one of the cheapest stock available in the pharma space at this point. Sun Pharma is also a top pick in the large cap space where we have a price target of 700, so it leaves hardly less than 10% upside. So I am not discussing that right now. Of course, it remains the top pick. Aurobindo Pharma, again, there is a lot more room to go. 15 times P multiple right now quoting at, and management, though it was a very mixed kind of earning in Q1, but API business and formulation business are doing very well in Europe and US both. So management has already given that confidence of growing this business 30% in Europe, and the capex they have outframed is $70 million. for this financial year. So putting all together, we believe that one of the cheapest stock available in terms of valuation, and this could be a best bet for the price objective of 750. Even if we say 15-16 times FY20 basis, there is a lot more scope to go upward.
Okay, so I think it's a consensus view on the pharma sector that our guests are bullish, and surprisingly the consensus view on the stocks that they like are also similar. Sun Pharma on the large cap front, Aurobindo no doubt is no longer a nifty stock, but still a large cap stock. But Aurobindo Pharma also finds a mention in the pharma picks. The next stock we want to talk about is Grasim. Now Grasim came out with strong set of numbers, and the counter has been rallying since. It's managed to cool off in trade today, but was doing extremely well in trade on Tuesday. What's the view ahead for Grasim? We'll ask our guests. So Yogesh, what do you make of Grasim? You all have active coverage on Grasim?
Yeah, we have active coverage on Grasim. Now it's a holding company now.
Yes.
It's no more a business. So there is a VSF, there is a cement and all together. But mainly there is a 60% stake in Ultratech and 57% in ABCL. So we believe that on a SOTP valuation with the market cap and the market value of this company individual, this discount of holding discount cannot go beyond 40-45% at the best. So right now company stock price is trading at almost at the fair valuation on FY20 basis even. So we don't foresee any upside from here. So it's a neutral rating as a house for us, and this cannot, as I mentioned, that the discount cannot contract further from this level. So it seems
and
that
on the core business, the VFS and the chemical business, is there growth potential left?
Debottlenecking in the capacity expansion has done in VSF, and cement is subdued right now. It's a muted one. So rest all, we believe that everything is all the businesses and the growth is priced in at this point in time.
And since it's a holding company, if you want to play the Birla story, which one would you recommend? As such, which one are you all bullish on? If you take the Kumar Mangalam Birla,
then it will be again, we are looking at only Hindalco as a Birla stock where the upside would be very much significant from here, though we need a tailwind on the metal sector, but that would be the one we preferred most.
Okay, that's the view that's coming in. And what's your view, Shahina, on Grasim?
I absolutely concur. Even I have a neutral rating. Basically, division wise they're doing pretty well, but they have this holding company discount which is going to keep the overall upside in stock price limited. But if you see segment wise, VSF, this was the last, we saw the quarter, they had the largest production that they've ever seen, and plus good, I would say good realizations also. So VSF division did very well. Cement, of course, through Ultratech did very well. I mean, the 29% growth is not really comparable because you had the merger that has reflected in the overall volume growth as well as the sales. But I think that is another business, and I like Ultratech in terms of the overall group. Yeah. So I think Ultratech has done well. Then you have their chemical business which has done well. So each and every segment of Grasim is doing well, expected to do well, and even Hindalco, I concur, has got a very good potential because you have volume growth that is there. The acquisitions that they have made recently, I believe that is earnings accretive, and I believe overall aluminium as a in the metal space is likely to remain pretty stable over the medium to longer term. So I think Grasim should do well, but upside is capped. So I have a neutral view.
So if someone is looking to, as an investment portfolio, would you recommend taking Grasim as a long-term investment portfolio, or a strategy would be individually go in or put your money in an Ultratech or a Hindalco? What would you, if someone is looking to do that, what should you suggest?
I used to hold Grasim for a very, very long time, and just last couple of months, few months back, I exited totally, and that's just to give you an idea of what my thinking is. And I am now into Hindalco in my family, and we are into Ultratech. Okay. So really speaking, I would prefer being in specific segments, but of course, shareholders of Grasim have made a lot of money and it gives you a decent dividend. So to that extent, I mean, you don't really lose by holding Grasim, but if you're really a person who looks for multi-baggers, then maybe you should look at individual segments where there is a huge volume growth expected to drive overall revenues and profitability. And also, if you've seen these two companies, like for example Hindalco as well as Ultratech, they are working on improving margins also by controlling the OPEX. So to that extent, I would believe individual bets would give a better return for the longer term.
Okay, so that's the view that's coming in on Grasim, more of a neutral view rather than play, and it's a better option to play individual companies in the Kumar Mangalam Birla group at this point of time. And the final stock we want to talk about is a mid-cap or a slightly large-cap pick that our guest would want to recommend for a slightly longer-term perspective. So, Shahina, which is the counter that you're speaking about?
I'll go with Yes Bank. I still don't hold it, but I think the stock, the bank has done phenomenally well considering the the ups and downs that we've seen in the private sector space as well as in the PSU space, and they have had a very good fundraising program. And if you look at it from a 2 to 3 year point of view, the valuations are extremely attractive, both versus the PSUs as well as the private sector. It is attractive. So let us say if I give it a book price to book multiple of 3, the stock can easily give you a return even after having rallied in the last couple of months. I still see a like 440, 450 type of level over the next couple of let us say a year and odds. So even despite the rally, I still see an upside, 1. And 2, I think whatever little increase in cost we've seen in the last quarter in terms of cost of the loan, what they've, the funding, I think that should stabilize over the next coming quarters. So their cost of funding also should stabilize, and I think even the loan book, whatever little pressure they've had, that also should stabilize over the next couple of quarters, because the increased profitability that they had, they've utilized to create higher provisions, and with a provision coverage of touching 60 over the next 1 odd year, I think it's a good bet to hold, safe bet.
Okay, safe bet to hold. And if you're looking at one key trigger why you would want to bet on it compared to the other quality banks also there, what would differentiate Yes Bank against someone investing in a safer bet like an HDFC or a Kotak?
Pure valuations, valuations and the growth, and of course the asset quality remaining pretty stable.
Okay, so Yes Bank is the top pick. Remember, it's trading close to record highs. It's up almost 12% this month. And Yogesh, which stock would you recommend?
For the mid-cap space, I would like to have L&T Finance holding, and we are recommending this to the customer on the disclaimer side, the long-term portfolio. The company has done very well and phenomenal turnaround story in last few years. We got, it was very consolidated between, for listing year, the whole year, it was between 50 and 70 rupees. The turnaround has happened off late after last 3 years now, and company has now outlaid that 15 to 18% growth rate in the loan on the higher base even from FY18 to FY21. This is based on the housing finance segment they are looking at than the retail both together. So there we are very much gung-ho about L&T Housing Finance company itself, and the infra book they have downsold now, so that will add up to the ROA and ROE numbers, which should be improved by 1.7 to 2.2% in by next 1.5 year. So there we believe that the price to book value is very attractive. 66 rupees is the book value for FY19 and 78 for the next year. So we believe even if you give 3 times price to book for fair valuation for L&T L&T Finance, then it will be 240 rupees as a price objective. So downside seems to be very limited for these businesses, and upside potential is very huge.
Compared to the peer, how does the valuation stack up for L&T?
Compared to peer, it will be again 3 times. Now the other housing finance company have come down, but this is a mixed bouquet. So there is a total businesses are there. So I think it would be around a little discount to the peer group. A little discount, not or more or less same.
And what's the key trigger that will differentiate L&T Finance to the peers?
The key trigger would be, as I mentioned, the retail and the housing finance, both they are focusing on right now, and with improved ROA and ROE number, so that will give a valuation on the higher side, at least the not the best, but at least on the higher side. So that should elevate further, and downselling of infra book, it will credit cost will be much lower.
Okay, so that's the view that's coming in as far as the stocks are concerned. Yes Bank is something that Shahina likes, and L&T Finance is something that Yogesh has spoken about today. But with that, it's a wrap on today's Hot Money. Yogesh, thanks so much for coming in. Shahina, thank you so much for coming in. Ask BQ comes up next. Stay tuned to Bloomberg Quint.